Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about stocks, of course, mostly growth stocks since those are the ones getting slammed. We're looking at finviz.com right now, the screener portion of the website. We're looking at the technical side and we see a month negative 20% and RSI of under 40. This just means we're looking for stocks that have been slammed lately that are under 40 on the yearly RSI. I would do under 30, but the stock market did kind of jump today or Monday, so I'm just going to factor that in, make sure we get most of the stocks, not just the ones that are still down from Friday. So before we get into this, we're going to look at the SP 500. So as you can see, up 1.18% on the day, a little bit recovery from the latest, pullback, not even a correction, but on the RSI, you can see that this blue line is still below the orange and the momentum is starting to lighten up, which is a good sign, right? Momentum lines up even more and we're going to see the blue line cross over the orange, and that will confirm that the market has reversed, right? Just like right over here. Same thing happened. Momentum let up, it turned green. Blue line went over the orange and we saw, a jump. So that's what we potentially can see if the blue line crosses the orange. However, until then, we're going to look at some stocks and to see if, if the market continues to fall, where good entry points would be at and potentially, where to take profit. So let's look at some stocks. Of course, Alibaba up 10%. We're going to avoid that one. Sea Limited still down 2.5%, even though the market jumped. Let's look into this one. So Sea Limited, you could see, has been pretty hurt lately from the highs, down right about 33%. So cut minus a third of the value of the stock within the last 2 months, or almost 2 months. So anyways, let's look into this stock even more. Let's say you want to buy into this stock, right? Maybe now's not a good price. Let's see what a good price would be. I'd say right around here, considering we see one hit on this line, 2, 3, 4, 5. So 5 hits on this one line at 209. Maybe we could bring it down even more. So 205, right? This will be our entry point into the stock if we're looking to trade it. Our stop loss will be right at 188, considering we see 1 hit, 2 hit, 3 hits. So it's a good time to get out if it breaks this line, right? We'll mark that red. Now our profit, just looking at taking profit, our first price target could be 239. Yeah, let's do that. That's pretty conservative. And our last one could be 284, or maybe we could see a full recovery, right? That's the very, very best. So this is our trade. We're just mapping a trade here. It's not even, it might not even happen, but this is just, looking into the potential future. You have to do this, set up a trading plan to know what you're going to do before the stock moves that way, just to set yourself up, right, for the unpredicted. So let's say we get in right at 205, stock falls 8%, right? That's our stop loss. You get out, you lose 8%. Now, if the stock jumps from this area, we see a gain of 16%. So right away, it's a 1 to 2 bet, right? We're risking 1 portion for 2. We're risking $8 for 16, or 8% for 16. Now, any 1 to 2 bet is pretty dang good, considering like 1 to 1, you risk 5 to make 5. That's generally what the market offers us. But if we're looking at trading, especially high growth stocks, high volatile stocks, then we see that greater margin of risk to reward. Now we already have a 2 to 1 or a 1 to 2. We could go even higher from this. So let's say, we cut half here and then we hold it till here, 38, 39%. Now we're risking, 8 for 39, which is even greater. Now, at that point, you have a fourth left or a fifth left, a small portion left. Stock fully recovers, which, may not even happen. You're seeing an 80% gain or 1 to 10. Very simple, right? You're risking 8% to make 16, 39, and 80, potentially. Or worst case scenario, you lose 8%, right? Start with 100 bucks, you lose $8. Or you can see 116, 139, or if you cut your position at all at the different price targets. So this is just, we're mapping out a trade here. This is C limited, a pretty somewhat good, trading, actual trade here if the stock continues to fall. With the RSI pointed down, nothing looking to let up, it might happen. Now let's look into another one. Square looks pretty cheap, under 180. Let's look into Square. Now we did talk about Square at one of our other videos, but you can see here it did break this channel, right? We'll keep that green. Here's the channel where it hits, falls, and it just keeps within these lines, and it's been like that for a year now, literally. So what do? The stock broke out of the channel. Now we are looking to get in, but not just yet, not at this price. We need to get a deeper discount, right? We want a deal. 153, that seems pretty good. In this market, a lot of stocks have been falling a lot more than they should, so it's not crazy to think that Square could fall to 153. Now let's act like this is our buy-in price, right? And our sell-out price will be right here. So we're risking $15. Let's mark this red. Okay, we buy in at 153. It falls. We're risking essentially 10%. Okay, risking 10% on this trade. So you have 100 bucks. It's going to 90. Worst case scenario. Now, best case scenario, we see jump. Your 10% goes to 2.6 or 26, right? Now you're risking 10 for 26 or 1 for 2.6. Pretty good, considering our other one was 1 to 2. It keeps going up. I guess we should make a third one here. That's pretty good. So right away, you're risking 1 to 2.6, if that makes sense. 10% down, 26% up, 1 to 2.6. Now we keep going, and you see a 58% gain. Now you're risking 1 to 5.8, or 10 to 58. Keeps going, and of course, you essentially almost double your money. You're 83%. Worst case scenario, right? You lose money. You lose 10%. That's worst case scenario. Not you lose 100%. You lose 10. Not even. Right? We're looking at 8.6. Maybe because one of these are off. Here we go. Again at 153. Yeah, right around less than 10%. You're risking to make 26. 50 something, 59, and 84. I'd call that a good trade. That's a good trade outcome. That's a good trade strategy. That's a good trade idea. And this is just one stock we're looking at here. Now, let's say Square doesn't even hit that price, right? Square doesn't hit 153, our entry point. You don't get in. That's just it. If it does, you do get in. See how it works out, right? If it continues to fall, you sell out, right? You lose the money. If the trade works out well, you make 8 times what your risk was, right? 1 to 8 after all said and done with each price target. So this is just looking at a simple trade outcome for Square. We looked at C limited. Now let's look at one more. Should we do Coinbase? Yeah, let's do Coinbase. So it fell 100 bucks within the past, looks like a month and not even a month. Wow, look at that. So Coinbase did a full turn on us. Let's see if there's some we could use to so Coinbase did this full on, tried to trick us, right? Went from 260 October 1st to 360 November 1st, or around November 1st, and down back to 260 around December 1st. So within 2 months, it stayed the same. Within 1 month, it jumped $100. Crazy trading. But let's just say we're trying to get back into Coinbase, right? We think Bitcoin's going to be hot again. Maybe we're not going to get the full-on cheapest price of 210, 211, but maybe we could get the 225, right? Let's say we get this 225 price again. Best case scenario, we get 225. Now, stop loss, of course, will be the low, right? 213, 215, around here. Because the stock doesn't really fall below this too much, right? Let's do 210. That's pretty dang risky, right? We're looking at a risky trade here. But in terms of percentage, we're risking 6.5%. Okay, now let's look at the potential outcomes. Number one, we see right here. Of course, this is pretty dang easy considering it hit a couple times, and it's around average where the stock has been most of its trading life, right? Number two, we see right here. Number three, we see a full-on recovery. That's just it. So let's go through this, right? Let's say Coinbase falls down to 225. We see a 6.5%, 7% drop. We sell out, right? We lose 7%. Let's say the stock does not fall after that, continues to climb. Our 7% has now turned into 13%, right? So we're risking 7 for 13, or almost 1 to 2 right away. It's a good trade. Keeps going. It's a 1 to 3, 3.5 basically. Keeps going, and we make 63% based on a 6 or 7% risk. That's the 1 to 10. This is what you want. This is what you want your trade to look like, right? Let's say, worst case scenario, the stock hits our price point, we buy in, stock falls, we sell out, we lose 6%. Worst case scenario, we lose 6%. Best case scenario, we make 60, right? Chances of that are smaller than, us making, what was this percentage, like 24, 25, or even 13, 14. That's still a 2 to 1 or 3.5 to 1, right? That's still a good trade. So also looking at the MACD and RSI, it does not look like Coinbase is even slowing down here. Considering MACD is still falling, right? Momentum's not even letting up a little bit. RSI is not even below 30 yet. That's basically what I'm trying to talk about here, is just these trade ideas. If a stock falls below your stop loss or hits the stop loss to sell out, no hard feelings, right? You lose a little bit, part of the game. If it recovers, you could have 5 faulty trades, but 1 winner, and that 1 winner could make up for those 5 faulty trades if you do your risk management correctly. I hope that makes sense, right? We looked at C Limited, Square, and Coinbase. Make sure to map out your trades next time you do it. Don't just go empty-handed. Make sure you have something to look at. I hope this video makes sense. If it did, please press the like button. We post videos every Monday, Wednesday, Friday, and please subscribe as well. Thanks for watching, guys, and until next time.